So Jeff's had a long history in operations and e-commerce. Actually, I first met him at a company called Real.com, for those of you who've been around the industry a while in Berkeley.
The antique people who know...
Exactly. So that was kind of e-commerce 0.5 maybe.
-1.
And then we shared a little bit of time together at eBay and PayPal, and then I believe you went on to do some work at OpenTable and help take them public. And then more recently, on the investing side at Andreessen. So welcome, Jeff, and thanks for joining us this morning.
Appreciate being here.
So the recent post you wrote, or at least a few months back, was really around kind of changes in e-commerce. There were a couple notable points there that you made about boutique sales, retail sales by category, and then a pretty interesting talk, I don't know if it was the same one, about physical retail space and kind of have we kind of reached a maximal point there. Do you maybe want to talk us through a couple of those trends and indicate why you think that's happening?
No, sure. I appreciate the opportunity. The post that got a little attention was called The Tipping Point, and it's basically we're very long-term bullish on e-commerce. And some of the high-level thoughts are retail as a total is not expanding much in the United States. It's basically flat with, I think, 2008. But during that same time, online has grown tremendously, which means they've taken more of the pie, which means the pie available to offline retailers is actually shrinking in a number of categories. And offline retailers are incredibly highly leveraged. Every time they open a store, they have fixed cement, staffing, inventory in that store, and they're typically really low margin, and if their top line falls, they run into big issues and often go bankrupt. So this happened to Circuit City a little while ago. I have a blog post predicting it will soon happen to Best Buy. Just not because they're bad retailers, because their top line shrinking and they can't cut their cost base fast enough. Ironically, I was on the phone yesterday with the Best Buy, one of their board of directors, who wants me to come and talk to them about this theory to the board of directors. And I'm like, are they setting me up? But so if you go one step further in e-commerce, you see the macro stat that something like 7 or 8% of U.S. e-commerce now is online. And that's a true macro stat, but what that doesn't take into account is the two largest categories are grocery and beauty and drug. They are almost completely offline still. So the other online categories, in what traditionally has been called specialty retail, their level of online penetration is 15, 20, approaching 30%. So if you're an offline retailer competing in those categories, you're in a world of hurt.
Yeah, and you were noting these stats are as of 2011, but from the sporting and maybe other few categories above 20%, but like you mentioned, food and beverage and health and personal care, two huge categories below 5% as of 2011. And we're an investor in a company called Ipsy that's going after the health and beauty, and we're starting to do a lot of F&B sort of investment. So one thing that happened, or seemingly happened at least over the last 2 years, is that people kind of lost the sexy for e-commerce. And I was wondering if you could maybe explain kind of what happens. We saw that in the US, perhaps with some of the deals companies that initiated that, but then we also saw it in India and Brazil and a bunch of international places even more so. You guys are still bullish on e-commerce, but what happened over those last 2 years with sort of funding environments for e-commerce?
No, it is interesting. Appetites among investors for different sectors wax and wane. We're very long e-commerce. I personally am invested in Zulily, Fab.com, Fanatics, Julep, Walker & Co. So we've gone very long. We were very gratified by Zulily. A lot of you may not have heard of them right now. They just went public and are trading at $7 billion. They're 4 years old and have $1 billion revenue run rate.
Not too bad.
Yeah, it's an unbelievably great e-commerce company. But it's a couple things. E-commerce is hard. Executionally,
Why is it so hard? Why is it, for all the reasons you just mentioned, that there's lots of offline retailers with high overhead and really large costs? Why shouldn't it be easy to compete against those companies?
There's differences between software businesses and what I'll broadly called hardware businesses. You actually have to deliver physical product. You have to move it. You know, when you're at something like Skype, you have to make sure the servers are working. You know, Pinterest, you know, scale with activity.
So hard relative to other software startups.
Other software.
Physical costs and margins to be taken care of.
And hard relative to physical retail, largely because of hypergrowth. Because, you know, these things, you know, a lot of them go, you know, 5, 20, 80, you know, 150. To manage that when you're actually putting real product out the door, you know, is challenging.
Is that also because margins are thin? Or, I mean, so one thing I'm always looking at when we're thinking about e-commerce is, you know, when is the timing of revenue expense happening? What's the margin look like? We tend to focus probably on smaller niche categories where there is fatter margins, we have sort of more branded identity to work with, and even possibly where revenue comes in before expense goes out the door. But you know, there's definitely sort of a repricing of e-commerce almost across the board that happened somewhere in the last year or two. Do you feel like that's an opportunity to go back into some of those companies at lower prices? Do you think those companies are going to struggle in getting there?
I think you just have to, if you're an operator, you have to put your head down and build your business, make it profitable, make it grow in the absence of, as best you can, what is popular and unpopular in Sandhill. Because one thing that has happened since you've been investing, since I've been investing, it changes every like 6 months. I mean, so the key is make sure you have the capital you need to survive. My partner, Ben Horowitz, if you read his book, I've got the obligatory plug, The Hard Thing About Hard Things. But Ben's a fantastic blogger. The one blog that resonated with me hugely was try to be in control of your own destiny in the capital market. Right. You know, just, you know, you can't always do it, but to the extent you can, you know, why put your business and your dream at the whim of, you know, what's popular and not popular today on Sandhill? So, you know, just, you know, I send that blog post to every one of my founders saying, you know, pay attention to this.
So, you know, capital requirements are significant for e-commerce companies, especially once they get larger. And so having access to, you know, open capital markets is probably pretty important. What's any advice that you have for people kind of getting started when thinking about sort of e-commerce strategies to approach? Obviously, with this post, you think that there's a lot of different categories to go after, but what's kind of your 1, 2, 3 playbook for how you might get started in an e-commerce niche?
Number 1, 2, and 3 is avoid Amazon. I mean, seriously, because if you are selling...
How do I avoid Amazon? Aren't they everywhere?
It's really hard if you will sell exactly what they sell. They have gotten to such, and if you sell it in the same way they sell it, they have gotten to such scale, and you know, Bezos is a brutal competitor. He gets scale, he lowers his cost, he reinvests that in lower prices to get more scale to lower costs. And I mean, he doesn't do it perfectly. They look for places where they can take yield, but you know, just like Best Buy is complaining about showrooming, everyone in here who sells the same product, you know, is being virtually showroomed on Amazon, because the first thing I do is kind of like, oh, I can get it from Amazon, it will be delivered tomorrow, I don't pay shipping, and you know, it's a pretty compelling proposition. You can try and contrast that with find me through Google, go in and out of each individual retailer, find the price and the shipping, I find one I like, fill out the entire form of some e-commerce company I may not have heard of. It's just, you know, the friction is unbelievable.
So familiarity with user experience in Amazon is an immediate advantage. Yep. Pricing in a standard category is an immediate hard hill to climb. So how would I go about doing that? Suppose I'm like wanting to go after a niche vertical. Maybe it's a slightly different demographic than Amazon is going after. Maybe it's less than $1 billion, hopefully, that they don't care about. Any particular thing that I would say I have a way to go after Amazon?
Yeah, I mean, I think even with Amazon there's great online categories. You have to, we try to invest in people who are selling what Amazon doesn't. So take the example of Zulily and Fab. They're trying to aggregate a long tail of designers who lack national distribution. So these guys have a choice. Do I kind of go the Walmart Target route, or do I try to stay in the boutique? So most of what's being sold in Zulily and Fab is hard to find on Amazon, and a lot of it is is browsing stuff that you didn't know you were looking for. I mean, Amazon and eBay are shopping 1.0. They're search engines. You type in the query of what you're trying to find. If you know what I'm looking for, you type in the query and they say give search results saying, do I have it? So, you know, a browsing metaphor works. The best way to do it is build product Amazon doesn't have access to.
So on the browsing point that you mentioned, a couple of new platforms that have come out in the last few years, Instagram and Pinterest, and I don't know if you feel like there's others as well there. What do you think the impact of those two platforms is on e-commerce, and are there others in that same area?
Right. I mean, I'm on the board of Pinterest, so I'm a big fan.
Okay. Talk in your book.
No, but it's one thing that Pinterest is what I think they said their last round was at about $4 billion, and they're a pre-revenue company, and so that gets a lot of attention. Pre-revenue, $4 billion.
That's traditional Silicon Valley, right? Don't worry about monetization. Just grow, baby.
And the thing, we don't worry about monetization on Pinterest because the amount of traffic and business they send to e-commerce companies and brands. I mean,
Right.
there are people literally going to their office trying to put money into their pockets.
Yes, I mean, like I would say, pretty clear difference between a company like Pinterest and maybe a couple of others like Snapchat or WhatsApp, where maybe the monetization isn't quite as apparent. Lead gen for e-commerce is probably eventually a part of the Pinterest story. Do you think that's also a part of the story for Instagram?
Yeah, actually, I do. We're hearing more and more companies who are leveraging Instagram to great success, particularly in a certain, a certain psychographic, certain demographic. It can really move business. So having strategies against those two platforms,
Right.
are really meaningful.
Okay, and do you feel like Amazon understands, the photos story or that sort of lead gen story visually? Have they, are they finding that they have to compete in that area, or do you feel like they're going to add that to the infrastructure of what they're doing also?
It is a little against their mode. I mean, they're algorithmic merchandisers,
Right.
and they do it incredibly well. They figure out what pixel placements generate the highest amount of business. Was meeting with one guy who's apparently he and his team generated $5 billion of revenue by tweaking the look and functionality around the buy it now button.
Right.
One stock. That flow. So they don't seem to be into browsing. Now eBay is trying to get more into browsing.
Right.
Their new homepage, the innovation means they made their homepage a whole lot like Pinterest.
Right.
And I've given John Donahoe a bunch
I'm
of shit about
guessing
this.
you probably have some connection to that world in talking to John.
Yeah, so I think everyone's trying to figure out the browse metaphor. Because the search metaphor is owned by two companies, Amazon and eBay.
Yeah,
Those two
I think
companies.
there's one other one you might be missing in there, but
The direct e-commerce. Those two companies represent 40% of consumer spending in the U.S.
and historically, Amazon and eBay did pay a lot for lead gen. I don't know the numbers recently. I used to know a little more closely when we were there, but is that still a big part of their budget? Are they outsourcing the lead gen?
Actually, different stories for the two of them. Amazon now spends more on shipping than they spend on marketing. Okay. So they've made the strategy free shipping is marketing. And
Very successfully.
Very successfully. eBay, there's a fascinating, I actually tweeted it yesterday, it's a study by professors at the University of Chicago and Berkeley that eBay worked with them to test whether SEM on Google worked for them. The conclusion in this incredibly dry academic study was, for branded terms, absolutely not. You get it anyway. They're searching for you.
People are looking for those.
And for non-branded terms, it only works if your awareness among consumers is not high. So if you're trying to build a brand, it may make sense. If you have a brand and you're trying to buy it, they found that people went to eBay anyway, even if they didn't see the firm.
At least for certain types of purchases, right? So another sort of platform that I think hasn't been as explored perhaps as much is video. Although, again, we've seen some really amazing results with a company called Ipsy and Michelle Phan, who does million-view sort of beauty and makeup videos. Do you think video has an impact on commerce? And if so, do you think YouTube has an impact on commerce in the long run?
I think video can, to the extent it aggregates eyeballs. So there's some bloggers doing some amazingly interesting things on just getting followings. And we're seeing tons of businesses are trying to help people with followers monetize them. I mean, one we recently invested in, which is not the high end of the market, is Teespring. Teespring's just a really simple business where if you have a bunch of followers on Facebook and you're trying to figure out how do I monetize it, you come out with a T-shirt that's attractive to them, and they share the revenue with the Facebook or YouTube celebrity. It's really simple. It really works.
Yeah, and it seems like there's a lot more celebrities in sports and media that are getting into tech. Do you feel like that's a trend that's going to continue? So Kim Kardashian and selling shoes online, or other stuff, but shoes probably.
All right, here's one of my favorite Ben Horowitz stories. I'm home on a Saturday night drinking a beer, and the phone rings, and it's Ben. And we actually work pretty hard as venture capitalists, but typically Saturday night, your partner doesn't call. So I'm like, Ben, what's up? And he goes, it's a long story, but I'm in San Francisco with Kanye. And Kanye has all of these e-commerce ideas, and you know more about e-commerce than I do. How about if you come and hang with Kanye? And so I went.
You get an
hung
offer
with
to
Kanye.
hang with Kanye West on a Saturday night to chat about e-commerce. And you went, right? You went. Okay.
So when hang, very interesting guy, but the celebrities are all over the place at this point. Yeah. Interesting would be an understatement. Yes, that would be an understatement. We had a very interesting evening. There's a lot of celebrities running around. It's ridiculous. The extent they're looking for economics, think about it really hard. Just, hey, give them 10% of my company to be my celebrity endorser. Yeah, I've seen very, very few of those works. A couple I actually think are pretty smart. Ashton Kutcher is in a bunch of my companies. I got to tell you, I think he's smart because he's in my companies. Sorry, but.
You mentioned the shipping point, and I kind of want to go back to that a little bit. So shipping has changed quite a bit over the last few years, both in terms of marketing and actuality. A lot of shipping costs have come down quite a bit, probably going to continue to do that, and a lot of shipping starting to come out.
Shipping prices or costs?
Well, I would say perhaps both, but maybe you can explain a little bit. I know that China has had some significant impact on shipping and prices, but what do you think is the difference between cost and pricing?
I mean, the cost to e-commerce companies of shipping hasn't changed a whole lot. You can negotiate deals with FedEx and UPS with scale. USPS can't really negotiate, but that's just they have a rate card essentially. The Amazon's put a ton of pressure on pricing, on being able to charge shipping pricing. So I'm watching eBay. Some enormous portion of eBay goods now have free shipping. It's a substantial double digit, and so that caught my attention.
But they're still putting that into the price somewhere, right?
Everyone's putting it in the price somewhere.
So is that really a user experience sort of angle where they're just trying to simplify?
No, it's a marketing angle.
Okay. Hey, free shipping.
Free shipping.
Free
Even though the item's
converts.
$5 higher. So there's some people. Match it, say, okay, it's a cost of doing business, I have no choice. A few others say, my model's different. The Zulily guys are wonderful about just saying, my model's different. They charge for shipping. They cross-dock everything, so it typically takes 5 to 10 days for them to get their items, versus, next day or 2-day delivery. And they said, for our model, mom's getting a screaming bargain. They're willing to wait a week.
Do you think that that's going to continue for a long time? I mean, obviously, the word free and discounts and everything have worked considerably, but do you think we're learning anything as consumers where that's going to deaden out over time?
No, I think it's going to keep going. And actually, I think Amazon's about to up the ante.
Okay.
I think Amazon's going to go broadly with same day or next day delivery. Part of the tax deals they cut is they agreed they would build warehouses. They're happening to build them on the outskirts of every large metropolitan area in the United States. There's one in Northern California, there's one in Southern California. I ordered something on Sunday afternoon, and it was at my Andreessen Horowitz office on Monday late morning. That didn't come through USPS or UPS.
Yes.
So, and the catalyst for it is also the expansion of fresh, because once they start delivering groceries to your home, they want to stuff everything.
Requirement for that stuff.
So to tell you how sometimes good ideas are just too early, Louis Borders is in who did Webvan. one of the notable creators of venture business, is back with Webvan 2.0 saying now's the time. I mean, I was right, I was early, and there's a pretty good argument, now's the time.
We invested in a company in Mexico City that's called 99 Minutes that's trying to do delivery in about an hour and a half. For
Cosmo.
Yeah, and actually, I was going to just say Cosmo with a K. How many people, this is probably too old for many of you. How many people actually made placed an order from Cosmo way back in the day? Note for the record, one of the things they actually delivered to your door was not completely hardcore porn, but softcore porn was available for delivery. I think they missed a real opportunity there.
All right, so the traders, it was in New York, traders on Wall Street used to order individual Diet Cokes from Cosmo.
Yeah.
So the Cosmo guy would run, here's your Diet Coke,
right.
20 minutes later, here's your Diet Coke.
Yeah, no, it's like, so was that just like so fucking stupid? I mean, couldn't they have just like placed a minimum order size and
that would be
solved
radical.
a lot of those problems rather than giving half their venture round to Starbucks, I think, for the return boxes. Anyway, so, some improvements on old models. On the physical big box kind of retail category, so, your point is basically, hey, physical big box retailers are competing with like shit ton more overhead than anybody online. Are we done with like physical goods stores? Are we going to see a reduction in all of that?
I got a post called "Why Malls Are Getting Mauled." Something like 25% of all malls in the United States, over I think it was 250,000 square feet, don't hold me to these exact numbers, are 30% or more vacant already. Once a mall gets to 30% or more vacant already, it's done. I mean, you go into the mall and it just feels depressing. Yeah. And so one of the REIT guys was asked about this, Real Estate Investment Trust has lots of commercial real estate. Say, do you think we have too much retail space? No, we're not overbuilt. We're under-demolished.
Under-demolished.
And I mean, as a result, I think there's certain businesses that will have much better legs than others. Home improvement stores will, because there's heavy stuff that people need the next day. There are going to be areas like that. But you've seen it happen in books, you've seen it happen in music, you've seen it happen in video, you've seen it happen in computer stores. You're starting to see it happen in apparel stores. Electronic stores are halfway there. Circuit City's gone, Best Buy's teetering.
So is that a function of sort of commoditization and margin there? So you'll see high margin stuff in the retail store, but not the low margin stuff and not the utility commodity.
I mean, every one of those sells what Amazon sells, right. And they just and it's unfair. The book, movie, and music had the double whammy of their product got digitized.
Right.
But it's going to happen. So you want proprietary goods. You want things that are hard to ship. Just hard to find.
We have a little bit of time left. I kind of want to jump into the payment world, which has actually seen quite a bit of innovation. You spent a lot of time running PayPal for a little bit and running eBay for a good bit. We have Square, we have Stripe, we have Bitcoin, we have a bunch of other stuff kind of jumping in. Do you feel like there's, and actually PayPal itself with David Marcus is doing a lot of interesting stuff internally. Where do you see payments heading? Are we kind of seeing a whole wave of innovation that's going to take over there?
There's some really, for me, there's kind of two macro trends going on in payments. One is companies are taking advantage of areas of their friction to build online payment brands. And I'd put those, PayPal, who build on top of eBay where there was enormous friction, Square that build on top of non-store merchants where there's tremendous friction. They couldn't accept credit cards. And they're all built essentially on top of the existing credit card structure. And so some do interesting things to mitigate those high costs. PayPal has the stored balanced accounts and the ACH payments, but essentially they're high cost payment mechanisms. We're fairly heavy investors in Bitcoin at this point because Bitcoin's the one thing for us that has...
Wait a second, the currency or the platform or both?
Both.
Both? Really, both?
Both. So the
Are you guys investing directly in the currency out of the fund?
No. Okay. But individually we're in it, and then we've invested in companies as well.
Got it.
So the promise there, the potential there, not promise, is that it is a open, unrestricted, available to developer, virtually free payment method.
With really easy UX that everybody understands.
Not yet. But I will remind you about PayPal's early UX.
Wait. How about right now? I mean,
I fixed it and it got broken again.
But
Yeah.
we were bitching about the UX 10 years ago. It's still got room to improve. And, several colleagues of mine here who worked with me at PayPal used to remember all of my rants on that. Yeah. So friction-free or at least lower friction payments is a big potential area.
I mean, we think so because, essentially that 3% that everyone pays and essentially passes on to consumers is incredibly uneconomic for the system. Right. Andreessen, it's funny, he pulls out the old emails where he and Timothy were designing the core protocols on the internet, and they actually have an error code. I forget which one it is, 403 or something. The engineers in the room may know it, which was payment error. They had planned to put payment into the original internet, and Mark goes, "We ran out of time." And so for him, Bitcoin has that promise.
Right, and I guess a similar story on mobile payments, which was brought up earlier this morning. Just conversion rates on mobile payment generally have been really tragic. Yeah. Some things that are getting that to improve, but still have a long way to go on that.
Yep.
Any thoughts on kind of mobile wallet kind of getting better? Do you see that anybody winning that battle?
Venmo, I think was one of the key reasons eBay bought Braintree, because that has promise. But the whole wallet thing, it feels like a solution in search of a problem. Just, hey, I can change the payment mechanism after I've made the payment. And, I've seen, PayPal did it, Google did it. There are a bunch of these running around, and they seem to have elicited a large yawn.
Yeah, but at the same time, you have large companies like Amazon and Apple and eBay trying to collect credit cards and probably make that one click or at least a couple click checkout
on their own platforms. Simpler. They have, yeah.
And at the same time, now interestingly, you're seeing payments happen on platforms like WeChat. PayPal just bought WhatsApp, and so do social platforms have an angle on sort of lower friction payments?
It's funny. I once had this very interesting conversation with someone, it was about 3 years ago, is who's better positioned in payments? Amazon, Google, Apple, eBay, to tick down the list. And it's fascinating because, Apple has a ton of credit cards. Amazon has a ton of, credit cards. Google's spent hundreds and hundreds of millions of dollars to try to get them, and it's largely been a failure. They could leverage those into payment mechanisms. Amazon's trying again. They're out again with Amazon checkout third party.
Yeah, I would say it seems like there's a big opportunity for social platforms to take that over. Not just because friction is lower, but because referrals to other people also would have an impact.
The other part, Facebook Connect. There is no reason they couldn't hang payment credentials off it and make it incredibly easy.
Fraud costs probably. Yeah, fraud costs would go up. Maybe one last comment. I know we're getting the hook here. You mentioned eBay, and there's your partners somewhat involved in that.
You're right, Grace.
I'll let you have the floor on any conflict concerns about your partner's role on eBay and PayPal. I guess more specifically, the question I wanted to ask is: PayPal separate from eBay, interesting or not? And what's the furor there?
I was the champion of eBay's buying PayPal. Those two businesses have more synergies together than any businesses I've ever encountered in my life.
Indeed, although at the time PayPal was 70% marketplace, 30% not, and now it's flipped.
Yep. In the internet, with things changing, payments going mobile, new people coming in, trying to write a commercial deal that would live in perpetuity about how those two could contractually work together to capture those synergies, for me, is implausible.
Okay, even if I'm an eBay shareholder and you might think that Microsoft or somebody not Amazon would double the market cap just to get PayPal.
I probably shouldn't say this in public right now. Well, Carl.
I'm not commenting the conflict issue. I'm just commenting on the value of PayPal, arguably potentially bigger than the value of eBay.
It probably is now, actually. When I pitched it to the board, I said one day PayPal will be bigger than eBay. It's a larger addressable market. It's a large opportunity.
And John's point is, well, the destruction of eBay isn't more valuable than PayPal separately, but
Yeah.
maybe that's arguable.
Anyone can use PayPal anyway. So then the argument for why it should be free is someone would pay a higher price than public market people would pay for it for some reason.
Yeah.
Now, there's a point at which if they really want that, they can buy the two of them and spin off eBay. I mean,
Yes.
I thought that was going to happen to eBay 5 years ago
right.
when they owned Skype, PayPal, and Marketplace. Marketplace was out of vogue. Buy it, get the other two, roll it out. There are three people who could have done it. None did it.
Interesting. Thanks for the comments. That was juicy.
Thanks, appreciate it.